Welcome back to Stocks and Trades channel. We provide easy to digest information and short videos about stock market investing, personal finance, money saving, and building wealth. Our content is designed to help you achieve financial freedom sooner. Today's video will provide news, insight, and investment suggestions on the week ahead. We analyze 2+1 stocks to watch this week and some others to avoid. So, let's begin. Disclaimer. All trading involves risk. Only risk capital you are prepared to lose. Past performance is not an indication of future results. This content is for educational or entertainment purposes only and is not investment advice. Our first stock type is dividend earning stocks. These are a great way to earn passive income. This week's suggestion is Northrop Grumman, with ticker symbol NOC. Virginia-based Northrop Grumman Corporation is a defense contractor that is diversified across short-cycle and long-cycle businesses. The firm's segments include aeronautics, missions, and space systems. The company's aerospace segment creates the fuselage for the massive F-35 program and produces various piloted and autonomous flight systems. Mission Systems creates a variety of sensors and processors for defense hardware. The Defense Systems segment is a mix between a long-range missile manufacturer and a defense IT service provider. Finally, the company's Space Systems segment produces various space structures, sensors, and satellites. Having 90,000 employees and an annual revenue in excess of $30 billion, it is considered one of the world's largest weapons manufacturers and military technology providers. Kathy Warden is the president and CEO since 2019. Some technical analysis data shows that Northrop Grumman's return on equity is 42.27%, its asset growth is -5.42%, its average volume is more than 701,000, its market cap is $55.5 billion, its beta is 0.82, its PE ratio is 12.3, 28.46. Our rating is 10 and we consider this stock as a moderate buy. Based on experienced analysts offering 12-month price targets for Northrop Grumman in the last 3 months, the average price target is $392.25 with a high estimate of $440 and a low estimate of $350. With current price at $353.20, this would mean an 11% average profit over the next year. Having a dividend yield of 1.77%. The ex-dividend date is on Friday 26 November and the dividend pay date is the 15th of December. The annual dividend is $6.28 being increased by 8% since last May, so buying a Northrop stock before Thursday's closing will pay you $1.57 in December. Our second stock type is growth stocks. A growth stock is a share in a business that's shown above average earnings and has the potential to grow faster than the overall economy. This week's suggestion is Fubo TV Incorporated, with ticker symbol FUBO. Fubo TV Incorporated is a sports-first live TV streaming company, offering subscribers thousands of live sporting events annually as well as news and entertainment content. Its platform, Fubo TV, allows customers to access content through streaming devices and on smart TVs, mobile phones, tablets, and computers. The company offers subscribers a live TV streaming service, with the option to purchase incremental features available for purchase that include additional content or enhanced functionality best suited to their preferences. Founded in 2015, Fubo TV was named to Forbes' Next Billion-Dollar Startup list in 2019. The service is available in the United States, Canada, and Spain. The company also has reported that as of October it had passed the 1 million subscriber threshold. David Gandler is the CEO and director since April 2020. Some technical analysis data shows that Fubo TV's return on equity is -80.42%, its asset growth is 45.15%, its average volume is almost 6.5 million, its market cap is $3.1 billion, its beta is 3.63, its PE ratio is -5.7, S is 3.83. Our rating is 6 and we consider this stock as a moderate buy. Based on experienced analysts offering 12-month price targets for Fubo TV in the last 3 months, The average price target is $46.33 with a high estimate of $60 and a low estimate of $30. With current price $9.42, this would mean a 116% average profit over the next year. Fubo TV posted some highly impressive results in its latest quarterly statement on the 9th of November, but they weren't enough to fend off the bears who sent shares tumbling by 23% in the subsequent session. Revenue increased by 156% year-over-year. Advertising revenue increased by 147%. Subscription revenue rose by 158%, while the subscriber count increased by 108% year-over-year. Our third stock type is blue chip stocks. These are typically large, well-established and financially sound companies that have operated for many years and that have dependable earnings, often paying dividends to investors. This week's suggestion is Visa, with ticker symbol V. Visa is the largest payment processor in the world. The company was founded by Dividend and is headquartered in San Francisco. Visa engages in the provision of digital payment services. It also facilitates global commerce through the transfer of value and information among global network of consumers, merchants, financial institutions, businesses, strategic partners, and government entities. It offers debit card, credit card, prepaid products, commercial payment solutions, and global ATM. In fiscal 2020, it processed almost $9 trillion in purchase transactions. Visa operates in over 200 countries and processes transactions in over 160 currencies. Its systems are capable of processing over 65,000 transactions per second. Alfred Kelly Jr. is the chairman and CEO since 2016. Some technical analysis data shows that Visa's return on equity is 32.76%, its asset growth is 2.44%, its average volume is more than 8.86 million. Its market cap is $438.5 billion, its beta is 0.92, its PE ratio is 36.1, and its EPS is 5.63. Despite our rating is 3, we consider this stock as a strong buy. Last week, it was announced that Amazon plans to stop accepting credit cards issued by Visa in the UK, starting next year, due to high transaction fees, but this is not a definite decision and could be revoked as the British government and authorities could intervene to this. Based on experienced analysts offering 12-month price targets for Visa in the last 3 months, the average price target is $276.77 with a high estimate of $305 and a low estimate of $255. With current price at $200.86, this would mean an average profit of almost 38% over the next year. E-commerce is constantly rising and so are transactions that Visa processes. Next week, many companies are going to release their earnings reports, which is one of the most potentially volatile times of the year for equities, and if we are not careful enough, we could put our entire portfolio at risk. Companies may announce earnings or losses and stock prices may go up or down significantly. For this reason, we suggest that you avoid opening a position for the following during next week and wait to evaluate the earnings announcement before deciding to invest. Zoom will release earnings on Monday 22 November after market close. Dell, HP and Autodesk will release earnings on Tuesday 23 November after market close. Finally, Deere & Company will release earnings on Wednesday 24 November before market open. Watch these stocks' prices carefully and think twice before making any decision. If you find this video useful, please like it, leave your comment below, share to a friend and subscribe to our channel. See you next time.